On Friday, April 29th, Flour Mills of Nigeria PLC received approval for the acquisition of a majority stake in Honeywell Flour Mills PLC. In a press release, the company said it had obtained all requisite regulatory approvals to acquire a 71.69% stake in Honeywell Flour Mills, formerly a portfolio company of Honeywell Group, and a 5.06% stake held by First Bank of Nigeria Limited. The acquisition has been approved by all relevant regulators, namely the Federal Competition and Consumer Protection Commission, the Nigerian Exchange Limited, and the Securities and Exchange Commission of Nigeria. Joining us to discuss the implications of the acquisition and the consumer goods and agro-allied sector in Nigeria is Ajobola Akamo, who is an investment analyst with financial advocacy firm Nairametrics. Ajobola, good morning to you. Thank you so much for joining us. First of all, could the transaction have been approved faster? I mean, the announcement was made November 22nd. Approval was granted April 29th, about 5 months. Is it because, 3 bodies were involved as far as the approvals were concerned?
All right. I mean, I would say yes, because it was 3 bodies, the FCCPC, the SEC, and the NGX did have to approve the transaction. But I think there was a little more due diligence done because of the, the ongoing spat between EcoBank and Honeywell Flour Mill. So what basically was happening is since 2015, the 2 companies, EcoBank and Honeywell, have been in court cases back to back. And that's because of loans that EcoBank gave Honeywell. I think about 5.5 billion Naira worth of loans have been given to Honeywell. Honeywell is saying that they fully paid off the loan, while EcoBank is saying they've only paid 3.5 billion of those loans and it remains 2 billion. So in fact, immediately after the announcement of the deal in November 2021, EcoBank actually wrote a letter to the managing director of Flour Mill advising them not to actually go ahead with the acquisitions of the shares. And they're saying that ultimately they're saying that the acquisition of the shares is illegal, quoting a KAMA law, which says that if a company is being wound up by the courts, then any of such transactions that the company is related to becomes void. But ultimately, like the court said that if the court finds it, the company guilty. But so far, the court has dismissed the case, and right now it's just in appeal. So just because the case is ongoing doesn't necessarily render the transaction illegal. But ultimately, I think that's another factor that played into why, the transaction was delayed for so long, or the approvals from regulators took this long.
For that, thank you for the breakdown there. So what's the impact going forward? Now, what's the impact here in terms of Flour Mills of Nigeria's reach across Nigeria, and I guess manufacturing capacity?
I mean, definitely we should see some bolstering in manufacturing capacity. I mean, you're combining 85 years worth of experience between Honeywell and also Flour Mill. Definitely we should see a lot of market expansion. We should see new products. We should see more reach in the Nigerian economy and also in the manufacturing sector. I think as of the last report I read, Flour Mill has a production capacity of 12,000 metric tons. Honeywell has a production capacity of over 800,000 metric tons. So combining that technical know-how and research and capacity would definitely help improve the manufacturing industry as a whole, and also put the 2 of them, the 2 companies, in a good position to help, boost economic growth in Nigeria as a whole.
And what about food security and competitiveness? I mean, we're talking earlier about the United Nations, and they're, talking about the impact of the Russia invasion of Ukraine. Food supplies are being, as far as exports, are being restricted by a number of countries. What does this do as far as food security for Nigeria is concerned, if at all?
I mean, I say it's good, but we still have a long way to actually achieve the term food security, right? I mean, it goes beyond flour milling or the flour milling business. And yes, we should expect some significant reach in terms of food security. We're getting there, but definitely we're not there yet just because of these 2, this acquisition going on. We're definitely not there yet.
Now, looking at Flour Mill stock, it appreciated, I think, up by 30 basis points on Friday. The stock so far is up 16.75% year to date. Here's an obvious question. Is it, did investors like what they heard as far as when the approval was received?
I mean, yes, I think there's a lot of calmness in the market, especially, like I said earlier, because of the whole EcoBank and Honeywell spat. I think because the regulatory approval was given, there's a lot of calmness. There's increase in volume of transactions on the market for Honeywell Flour Mill stocks on Friday, and also for Flour Mill's stock also. So we saw Honeywell actually leading in terms of volume of transaction on Friday. So definitely the shareholders took it well. And also the stock is trading, Flour Mills shares is trading close to its 52-week high. And they posted a profit after tax of, I think, about 17 billion, which is up 7.84% for that Q1 2021. So that's a really, really good sign. Sorry, Q1 2022.
All right, so flour mill stock is doing well, but what about the wider consumer goods sector? I want to play a clip here, if we have it, from Mukhtar Mohammed, who is an investment analyst. We had him on the show talking about the consumer goods sector. Let's take a listen.
Most of them may come up with profit, but it's going to be tough for them because they are the ones that are really, really, really going to suffer. Yeah. Remember, inflation figures are going up, consumer confidence is down in terms of earnings. So I don't personally advise anybody to play that space now.
Consumer goods,
yeah, consumer goods. It's going to be. I want to see the first quarter result from those sectors, but I don't think those sectors are sectors that any shrewd investors who want to play with key glove, they will just look at the price in terms of price movement.
All right, Ajobola, what do you make of that? What's your view on the consumer goods sector, looking at the wider sector on the NGX?
All right, I'm just going to call out a little bit of figures. Let me call out some performances of consumer goods sectors just in the month of April that just concluded. Nigerian breweries was actually the third largest gainer in the month of April, gained 41%. Guinness followed in the consumer goods sector, 30%, Cadbury 22%, Champions Breweries 17%, International Breweries 15%, Vitafoam 8%, Flour Mill 6.6%, and the list goes on. I mean, I don't understand the fear of inflation, but the truth is, when there's inflation, cost actually does, in fact, transfer to the final consumer. So ultimately, these companies are still making money, and it's evident in their Q1 results so far. I mean, Nigerian breweries posted profits of 13.6 billion naira, up 77% against the first quarter of 2021. And these are companies that are recovering from the effects of the COVID-19 pandemic, and we're seeing their productions and they're seeing their sales go as high as ever. So I do not agree with the analysts. I think the consumer goods sector is actually one sector that people should actually look at.
Great stuff. Okay, we're also joined by Feyisike Ilemore, who is a consumer analyst with Rand Merchant Bank. Faye, thank you so much for joining us as well. So yeah, Ajobola was just giving his thoughts on the consumer goods sector as a whole. We had Mukhtar Mohammed. He played a clip just now where he was a little bit bearish on the sector. So Ajobola, he's bullish on consumer goods. What about you?
A little bit cautious on the sector.
Okay.
Yes, so maybe you say bearish. And that's because of the headwinds we are seeing in the sector. Disposable income is still an issue. The wallets of consumers are still shrinking. Inflation, we have high inflation right now and it's still rising. That is putting a lot of pressure on consumer income. And then when you factor in input raw materials, FX is still an issue. Many of our consumers import their raw materials, so they have to source FX, and it's at a high premium to the NAFEX rate. So that is putting a lot of pressure on margins. And then there's the possibility of another round of devaluation. If that happens, we'll see that impact, pressure hits earnings. And also diesel prices. Many of these consumers that we face or that we cover, they have to use diesel to run their trucks, run their businesses, and that is also putting a lot of pressure on margins. So because of that, we're a bit cautious. But what we've seen now, if you look at the half-year results, the first quarter results, what we've seen is that they've raised prices significantly to pass through that impact. But I think at some point, they might scale back just to, push volumes, because many of these companies actually saw a lot of pressure. I know Nigerian breweries saw pressure on volumes. So at some point, during the course of the year, we might see them scale back in terms of prices just to compete and push volume. And that will, of course, put a lot of pressure on margins.
Thank you for that, Faye. All right, so let's get to your picks. Both of you have some picks on the NDX as far as consumer goods. Ajobola, let's start with you. We've got three of your picks. I think all your picks are breweries, Ajobola. So let's what's your, your justification for what you're looking at? Yeah, you've got Nigerian breweries, you've got international breweries, you've got Guinness Nigeria PLC.
I think I'm looking at, the top line items on their latest results. really, really impressed with their performances, especially international breweries. I think it's the first time in a long while that international breweries is actually posting a positive profit after tax of 721 million. And I think that industry or that sector in general is actually really, really growing. So Nigerian breweries was able to grow its profit after tax by 77%. And definitely, that trend is expected in the second quarter and beyond. Same thing with Guinness. In fact, Guinness is actually the most outstanding. Guinness Q3 results showed an increase by 731%, currently posting a profit after tax of 15.3 billion. So we're seeing that trend. We're seeing that increase in their revenue base and also ultimately their final profits. But however, most of these stocks are trading close to their 52-week high. So I wouldn't say be so bullish right now. I would definitely wait for a pullback in the market, which usually happens. Wait for a significant pullback, or maybe not necessarily a significant pullback, but at least a decent level of pullback before, striking that buy order. So I'll say those three stocks definitely are my recommendations.
All right, thanks, Ajobola. We've also got your stock picks. I think you have Nigerian. You have flour mills in there, but you've also got breweries. Yeah, there. You've got Nigerian breweries. You've also got Guinness, and then you also have flour mills of Nigeria. So what's your justification for your picks?
Yeah, I mean, I share the same view with Ajobola in terms of the breweries. They really performed well. We saw Guinness performance even from last year when they released their Q1 numbers. So what the breweries have been able to do is to raise prices significantly. I mean, if you look at Nigerian breweries Q1, margins was around 46%. We've not seen that level since 2018, although they are facing operating cost pressures. But what they've been able to do is raise prices really high to offset all of that. And that has actually filtered through to bottom line. For MB, we still see a lot of upside. We have a TP of around 67 naira.
Wow, viewers, TP is target price,
target
right?
price.
Okay,
target price
yeah.
of around 67 naira.
Yeah.
The stock is around 57 at this point, so there's still some upside. Guinness also it has done over 100%. Yes, because they've really done so well this year. If you've been following Guinness, they've been reporting back-to-back losses for a while. Yeah. But this in their current fiscal year, which will end in June 2022, and they raised prices to also offset the pressure on margins. And then their spirits actually did very well. Singleton did very well, and their other mainstream spirits, they also did very well in terms of volume, and that also benefited bottom line. In terms of operating expenses, they also faced a lot of pressure, but not at the level that we saw for Nigerian breweries. So we're also very optimistic. Flour mills, we still see a lot of opportunity, a lot of upside. We have a target price of around 39 naira. It's around 31 naira, so there's still a lot of upside for the company. They've raised prices. I mean, when you look at the bakers, the manufacturer of bread, bakeries, they always say that, the flour milling companies keep raising prices on a quarterly basis, to pass through the increase in raw materials. And, we've seen that filter in their, showing their sales. Margins have not really been great for flour mills, but because of that strong revenue, we've seen operating profits and earnings perform better than what they had last year. And we see them sustaining that momentum into the next quarter. So we are optimistic on those three names.
Excellent stuff. There's a tweet on shrinkflation. I'm not sure if we'll put it up, where I think some players in the sector were kind of, there it is. So I think they were talking about Domino's selling 1,000 naira pizzas, which are much, much smaller. KFC doing yam fries, which are normally made from potatoes. And I think Chicken Republic selling a meal with a boiled egg for about 500 naira. So shrinkflation. Ajobola, let me come to you first. What's happening? Are consumers reducing the amount of what they sell because of declining, purchasing power? What do you make of that?
All right. Funny thing is, back in 2018, 2019, Chicken Republic's rice and chicken was going for 500 naira. So it's amazing to see, I think in 2020, it then went for 700 naira. And now rice and egg is going for 500 naira today. So I think it's basically a reflection of the current economic realities we're facing right now. And purchasing power isn't where it used to be, and people are basically trying to adjust, to the current realities. I'm sure Chicken Republic, Domino's are not seeing the sales that they are used to, so they have to change their marketing mix and their sales mix to what actually fits the current economic reality. So I think more of this is going to be happening so far. I mean, we've started before now. We've been seeing sachet Baileys, sachet alcoholic drinks, smaller bottles of water and all that. So I think this growing trend is going to continue until we actually, see some level of growth, economic growth, and we're able to see that this inflation rate is tamed. I think that's my ultimate take on that.
Thanks, Ajobola. What are your thoughts?
I mean, it's the same thing. And let me speak from the point of view of Chicken Republic. Like Ajobola said, before now, we used to have 500 naira combo, fried rice or jollof rice and chicken. But at this point, the cost of everything has gone up. That product cannot fly anymore. And then what manufacturers try to do is that they try to reach consumers at every point. So you see manufacturers, they'll have premium goods, mainstream goods, value goods. So what Chicken Republic is trying to do is to target the mass market. The mass market before, they could afford that rice and chicken for maybe 500, but now they cannot afford the 700 or the 850 that they've increased the price to. What Chicken Republic can do right now that can meet their 500 naira is rice and egg, right? That's the only protein that can fit into that bucket. And they are doing it because they don't want to miss the money from the mass market. Sales is kind of weak at this point. They have to answer to their shareholders, they have to answer to their board, and these conversations are not easy. So to ensure that you get all the sales that you need, you have to ensure that you're getting the money from the mass market. And this is the product that I think they are putting out to the public to get that money.
Feyisike Ilemore, thank you for joining us, consumer analyst with Rand Metro Bank. Ajobola Akamo, investment analyst with Nairametrics. I thank you both for joining us to talk about the consumer goods sector. Really appreciate the insights of you both.